if there's a lot of noise, to use the term that Powell used, how do you cut through that to what's actually taking place and thus what it means for investors?
Well, I think the challenge in this sort of circumstance is there's an incredible amount of volatility. And so it's not a time to have high conviction in one direction or another, because one day we have 25% tariffs on our three major trading partners, and the next day they're all gone. And so that sort of volatility, very, very hard to manage. What we're seeing is that that's forcing professional money managers to take risk off the table. And part of what we're seeing in terms of the cross-market dynamic is that, the long positions that a lot of those leverage investors had are being drawn down. That's some of the market action that we're seeing in the tech names, and some of the short interest positions are getting cut back. And we're seeing outperformance there as well. And so that sort of environment is challenging, because the question is, who is going to be the incremental buyer for risk assets in an environment where there's so much policy uncertainty. And when you get those leverage players pulling back, like we've seen across the hedge fund industry, there's not a lot of incremental bid there that isn't already all in on equities so far.